before we get started, again, I warned you over the weekend. I was looking for a bottom to form this week. It looks like we have that now on Monday, but I've been warning you this week ahead of the PI data and last week and in the weekend videos. I've been talking about this divergence that's developing on the Fear Greed Index. And again, it's a multiple point divergence. It looks like it's playing out as I've been warning. We saw extreme fear, and now we've gotten to a level where we're just at fear, and it is forming a divergence with the S&P 500. As I've talked about before, we had today's rally. It's been forming. I've talked about it. It was setting up last week. Then Monday and Tuesday, putting the finishing touches on it. We had the Fear Greed Index at extreme fear. Now it is just at fear, and that's forming that divergence at extremes. Down here at these extreme levels, a triple bullish divergence is forming at our key trend line of support from the 2023 low. Also, I've been talking about that support level bouncing at that area. And if I just bring up the S&P 500 here in red and the Fear Greed Index in blue, if I bring them up together, you can see the divergence I'm talking about. And again, the S&P has sold off. It's a December 6th high. We formed a bullish divergence that gave us a bounce back to the trend line of resistance, and that gave us this bounce at extremes and our extreme fear low. And then now we have this, and this is not updated yet. So I showed you the other chart. Again, we're moving off of that low a little bit more, but we do have this triple bullish divergence that, again, off of our major trend line from the 2023. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, if you like the indicators, please take the time to partner with me in supporting the channel today. And I just ask that you do what you can to help out because I don't want sponsors. Contact me all the time, and I turn those offers down. A lot of shady deals on the internet, and I would just rather have a direct relationship with you than be here to try to sell you a bunch of stuff. What is common on YouTube channels where people just end up starting to try to sell stuff. I'm here to talk about charts and technical analysis and the S&P 500 and the NASDAQ and Bitcoin and all these things that I like to talk about. I'm not here to sell you something. You're smart enough to figure out what you want to buy. You don't need me telling you. Like the charts as much as I do and my indicators, then please partner with me. You could take a moment to reach out and do that. I would really, really appreciate it. I thank you for your consideration for that. Well, right on, right on, right on. It's playing out. Again, talked about a bottom forming this week. I think we've got it on Monday. Again, we were hearing all the doom and gloom. Oh, we're all going to die. I told you I think we have an ABC move, and I think we're going to get the final blow-off top move here. Seeing momentum officially flip here. We got a bullish reversal of conditions. Now we'll see. Do we just go up and try to break the downward trend line and get a powerful move before we get a pullback, or do we try to go up under the trend line that I'm talking about in this video? You'll see it on the 15-minute chart and the 60-minute chart, and then pull back, try to fill today's gap. We'll be watching to see how it unfolds. Is today's gap a gap and go, a gap and fill, or a gap and trap? I don't know. We'll be watching, but my indicators warned me to be watching for a bottom, and I think it's now carving out, and that's why I told you I thought a bottom would form this week. Be watching to see if we get some green here, and if the MACD eventually tries to get a bullish cross, or do we pull back first, or do we go higher and then get a pullback first? Do we get continued strength first before we get that pullback or not? We'll be watching to see how it unfolds, but you got a bullish signal now here on the momentum. It turned bearish here the Fed day, and now turning back to bullish. Do you see the little blue arrow? That means we're closing above the cloud, and we're going to flip the cloud back to green as of the open tomorrow. If we close back below this lower boundary here, flip it back to red. But if we just go back and fill the gap and then resume the advance, then stay green. If we just keep going and don't fill the gap, it will stay green. We still have the 10 below the 20. The 10 and 20 are still below the 50, and we've got the 50 directly overhead. Trend line or downward trend line, you'll see it on the intraday chart. Intraday charts is directly overhead as well. So we'll be watching to see if there's more work to be done. I think you got a pretty good shot at a bottom here. I told you I didn't think we were going to go below this 5670 area, which was the July peak, and below that you have your 200 period. Momentum officially shifts back to bullish here today on the S&P 500. I was looking for a bottom this week. I think we've got it. By the way, just so you know, I think in the coming weeks ahead, we're going to flip it back to a bullish signal here in the weekly time frame, and I think you'll end up seeing green bars and get another reference point of a divergence, because I do believe we're going higher on the S&P 500, the trend line I've been talking about on the weekly chart. Bullish reversal of conditions on the Dow, getting back above the 20, again, still under the 50. We'll see if we get reactions off the 50-period moving averages on the Dow and the S&P. Do we get a pullback? The Dow got a bullish cross. The S&P doesn't have that yet as the histogram goes into positive territory. The Dow got very, very oversold. Signals turned bearish back after it peaked on December 4th. We turned back to bearish right after that, and they've been consistently bullish up until bearish up until today. I told you over the weekend, I told you earlier this week, again, the Dow and the Russell have those bullish divergences on the RSI. We're likely going to bottom. For the Russell, as it bounces off of that 200 period, again, a bullish divergence forming on the awesome oscillator, and we've got it on the RSI Russell daily chart here. NASDAQ, it was close but no cigar, and again, we'll be watching to see how the NASDAQ performs with Taiwan Semiconductor earnings coming out tomorrow. We'll be watching that here. Didn't quite make it. Again, can we continue onward and upward? We're stalling at the 20-period moving average again, and still red bars right here. Still no bullish MACD crossover. We'll be watching to see, do we get a pullback? What happens with this gap? We'll be watching to see, do we carve out a bottom this week? Is the bottom in on Monday? Start to sell off. If we fill the gap, if we do pull back and try to fill the gap, do we get a higher low? We'll be watching closely. NASDAQ daily chart here. Got the stochastic turning up though. We'll see if we can get the other indicators turning positive with the NASDAQ. The rally so far this week has prevented the cloud from flipping to red and bouncing off the 20-week moving average with NASDAQ here in the weekly time frame. MACD has now gotten a bearish crossover. We'll be watching NASDAQ stop making new highs or cover, and again, start seeing a rotation where we start seeing a tech sell-off, but we yet see recovery on the Dow and the S&P and the Russell. And do we end up diverging with the NASDAQ and the S&P? I'll be watching these things closely. I told you last week I thought a bottom would form this week. We kick off earnings season as we get the inflation data, because we had a sell-off, and going into Inauguration Day next week, we had a sell-off ahead of Inauguration Day, and I told you that had we rallied with it, it could have been a sell the news event. Because we've been selling off since December 6th, bottomed out Monday for many weeks now, it's likely that the Inauguration Day will give us a continuation of the rally to resume the election rally that we saw off of the November support, and we've come back and filled the gap. I'll show you those charts. I told you the Dow and the Russell were very, very oversold. We talked about this last week. We talked about it over the weekend. I was looking for a bottom this week, and that's now likely happened with our low from Monday. Dow surged by 703 points, up 1.65%. Back above 43,000. The S&P rose by 107 points, up 1.83. The NASDAQ rose by 2.45%, up almost 2.5%. Russell, best performer of the day, was up nearly 2%, and the VIX collapsed by 13.84%, down to 16, and you know what that means. If you don't, I'm about to tell you again, with the VIX collapsing by greater than 10%, it means that we're going to get a down day on the S&P 500 in the next two trading sessions. And again, we're going to get Taiwan Semiconductor tomorrow. That be the catalyst for a sell-off or other earnings, possibly. But today we had the banks, and the Dow did well, and then we had the CPI, and the Dow did even better. So we'll be watching to see what happens with Taiwan Semiconductor. A pullback either ahead of Inauguration Day or maybe just after Inauguration Day. The market will be closed for Inauguration Day on the 20th, on Monday. That is the same day as Martin Luther King Day. We had the banks and the financials. We had BlackRock report, excellent earnings report. Citi beat on earnings, announces a big buyback. JP Morgan beat on earnings. That helped the Dow. Got the CPI before the market opened, and the Dow just surged, and we got that 700 point move in the Dow. We got that PPI inflation data yesterday, and the data came in cool. The market rallied, but then pulled back. and it gapped higher today, and we got a big rally up. It's all after the gap lower on Monday, where again it was probably a gap and trap key support trend line from 2023. We've talked about the trend line being where again buyers are likely to come in. I talked about this in great length and detail last week and over the weekend. Told you that that trend line was likely going to act as support, and it did. We have the CPI, a big rally on the CPI data that we got today. CPI came in month over month, 0.4%, a little higher than expected there. Core CPI came in better than expected, 0.2%. It was supposed to come in at 0.3%, so that came in a little better. And then we had the year-over-year numbers. The headline number came in right in line with expectations at 2.9%, still higher than the 2.7%. So we are seeing the headline number tick up with inflation, but it came in line with expectations. That's what Wall Street was expecting. And then the core year over year came in better than expected. So we've had the month over month core come in better than expected, and the year over year come in better than expected with the core data. Expected to come in at 3.3, it came in at 3.2, and the 3.2 is lower than the previous reading of 3.3 on a year over year basis. So that actually went down while we had consumer price index headline number go up. Now, the 10-year yield dropped by 2.82% today. I talked about how we were overthrowing this trend line at the resistance zone, this trend line right here from early 2024, and we overthrew it, and we're reversing off of it right now. I talked about the divergence here. I talked about the divergence, again, from the previous peak over here, and also the divergence that was forming on the histogram, and it's on other indicators. It's still possible that we end up going up into this level right here and end up forming a double top with the 2023 peak over here eventually. Now we're turning down. Even if we don't go up and make new highs up at the 5%, and I think that would be the limit how far this rally would go, but we do turn down here and stop making new highs on the 10-year. It has a negative correlation with the 10-year, and right now at the moment it does. And again, as we've seen the December top, we saw the 10-year rise. Now it's coming down. If it turns down here, this can give us the catalyst for the final fifth wave, minor wave 5, to complete the blow-off top, bringing to a conclusion our larger waves, bring about a cycle top. I think that's going to be the case. And again, I talked about final run-up. So again, I've been expecting the Dow to rise back up to back test this trend line for a lower high or to make a higher high and hit this trend line one more time. The S&P never did hit the upper channel line. So again, looking for either divergence or confirmation of a lower high with the Dow. But I told you the Dow was extremely oversold, forming bullish divergence before the rally started. Now the Dow is up 3% for the week, up almost 1,300 points. Be watching to see if we get a pullback or not, but I do think we are going higher, as I've been saying before this rally happened. Why I was looking for a bottom this week. We'll see if we get another Dow theory sell signal in the most recent price action between the transports and the Dow here. We have this larger one. Bearish divergence played out on the Dow at the December 4th high at that trend line right there. And again, I told you we have now bullish, triple bullish divergence here on both the Dow and the transports. I've been talking about this. We've seen the Dow drop about 7.25%. Now we're rebounding back up. The big sell-off in the Dow and the Russell caused me to believe the S&P was going to rally, try to bottom out and rally up to new highs, try to bottom out surrounding our gap fill from the presidential election. By the way, back to the Dow weekly chart, we're seeing it firm up, the RSI firm up at the 50 level. We're seeing something very similar to that on the Russell weekly right here. And I talked about the trend line being tagged. I told you over the weekend we can go a little bit lower and reach it, which we did on Monday. And we hit the 200 period on the daily. We hit this trend line, and we're trying to bounce. I think it will eventually diverge with the S&P like it did back over here. That's what happens at market tops. But one of the reasons why I thought we would see a rebound in the market and a bottom this week, and I still believe that we'll see bottom carve out here, even if we pull back this, from the rally we've had up. The Russell, like the Dow, up over 3%. It's up 3.33% for the week. So again, after a very sharp decline, sell off and go back and fill the gaps, you can form inverted hammers or something like that. If we end up selling off over the next 2 days, we'll be watching to see what happens with Taiwan semiconductor earnings in the market. Russell was up just under 2% today, and again, big rally off the 200 period. It's right there at this trend line, and the trend line we saw in the weekly chart with this bullish divergence that has formed. Again, a multiple point bullish divergence that had formed. It was a bearish divergence that tipped us off that the Russell was going to sell off at the late November peak there. Quickly followed it with peaking on December 4th. We peaked over here on November 25th. I think that, again, this is suggesting a bottom, but I do think the Russell has topped out. And again, same thing with the MACD. The bullish divergence on the histogram now causing that MACD to get a bullish cross. We don't have that yet on the S&P 500. We might go back and fill those gaps. We'll be watching to see how it unfolds. The Dow and the Russell are suggesting a bottom for the market. We don't have that bullish cross yet on the NASDAQ or the S&P with the MACDs. Again, we're rebounding here off of our 100 period moving average. We were just above it, just like Bitcoin, exactly what Bitcoin did. Come back up to the 20 period, so we'll be watching. We had this rising wedge. We saw it overthrow, then we broke down from it. After trying to do so here, it failed, and we did it here. And right now we're trying to bounce off the cloud, off the 100 period moving average after breaking the July peak, just moving slightly below it. If we do end up going lower on the NASDAQ, and I'm telling you, there is a possibility we see rotation in that the NASDAQ sells off and, the Dow rises back up. S&P rises back up. So the S&P has tech exposure. It doesn't have the same kind of exposure as NASDAQ. Watching again, can we make new highs or not? And sometimes they diverge, and that's the only reason why I'm saying that. It's possible with our topic till in the monthly time frame that we peaked with NASDAQ in December. There was a divergence between the NASDAQ and the S&P back at the 2022 high for the S&P. NASDAQ did not make new highs. We'll be watching to see if that's going to be the case again or not. It doesn't have to play out that way, but it could because they often diverge. So we'll see. They often diverge at turning points. I recall they diverged back over here at the July peak. NASDAQ got a lower high. S&P went on and made a higher high, but then they both sold off. Got the July and August sell-offs. I'm going to be drawing some trend lines here. Had a chance to update this right here, but going to be watching because, again, you still have a possible larger rising wedge, or we move above the high in December. It would cancel out that bearish weekly candlestick. I've been showing you. Don't have time to do it today. NASDAQ 100 was up 2.31% today at 480 points. Again, the bullish divergences that I talked about over the weekend and earlier this week, they're now playing out with Monday's gap lower. You got these multiple point divergences, and again, we'll be watching to see if this low now can hold. We'll be watching the gap here from today to see what happens. Do we go back and fill it? Got the downward trend line a little bit higher, our 200 period near that area as well. Again, and we have gaps way up here. Are they eventually going to get filled and go to new highs, or will we get a lower high on NASDAQ? All is said and done. So again, our bullish divergences on these 60-minute charts, which predicted this rally, played out beautifully. That's why I told you I thought we were going to get a bottom this week. See what happens with Taiwan Semiconductor tomorrow and what the NASDAQ does. We still have the 50 below the 200, so there's more work to be done here. Whether we go higher and get some kind of pullback and don't fill the gap, or whether we end up filling the gap, we'll be watching. Now, we saw the VIX drop by over 10% today. It dropped back down below the 50-period moving average. I told you the VIX often will top before the S&P bottoms, and again, we had that happen this time around. The VIX had that surge, and we had the peak over here back when we were getting the Fed sell-off over here, and we've gone to a lower level here. And again, we talked about the divergences that were forming here, the triple bullish divergences, and we saw the S&P go lower, but the VIX got a lower high. The VIX topped before the S&P bottomed, and that's exactly the way it sometimes plays out. And sometimes they do it simultaneously, like over here at the August low, but other times you often get a VIX bottom or VIX top before the S&P bottoms. That way, during the bear market from 2007 to 2009, the VIX topped out, the S&P bottomed, but you also have it in more recent price action as well. But we're opening the door now for our wave 5 to now be underway. We've likely bottomed on Monday. I warned you about the divergences, the bullish divergences on the 60-minute chart that we're setting up, and then we gapped down on Monday. We had a little divergence here on the 5-minute chart here on Friday, and then we gapped lower. We gapped lower on Monday. It was a gap and trap. We gapped and we went in the other direction. Always watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? Well, we gapped down. It was a gap and trap, and I talked about these bullish divergences on the 5 and the 15-minute chart. Got a big rally back up above the 200 period, or towards the 200 period, and then the next day we gapped up to it. We went back and filled that gap, and we got the higher low there on Tuesday. Jumped around a little bit back and forth surrounding our release. The release of the PPI data ended up with a gain, not near the highs. We had a much bigger gain, and then we had this big gap today. And again, bouncing off our 200 period moving average, the black line here and over here. And we had the CPI data, again, positive banking data. The Dow was way up, and it surged even more when we had the release of the CPI, and we saw futures surge, and that created this gap right here. And we went higher. We formed a little divergence. We pulled back, and then we went even higher. And now we have this larger divergence. I didn't mark it yet. Updating other charts, but you can see it right there. And again, we'll be watching. Do we start to pull back or even go a little higher? We're near the trend line on the 15-minute chart. You'll be able to see that. But now is what I'll be watching is, do we come back towards gap support here, gap support, or do we go back to try to fill a gap here at 58.42, almost 58.43 here? And do we do that? And do we have now the completing of wave 4 over here? And we're now starting wave 5, which I believe minor wave 5 is now has now started. So I'll be watching the gaps here. If we pull back, the VIX is suggesting that we will have a down day in the next 2 trading sessions on the S&P 500 for either Thursday or Friday. We do have Taiwan Semiconductor. We'll be watching to see how that impacts the stock market and the tech sector. That really powerful rally on the NASDAQ. Our gap lower on Monday, I talked about the divergences here again on the 15-minute chart, and I talked about how we had turned off the trend line here over and over again. Could still try to reach that trend line, but we are forming negative divergence here. May not be done yet. We still may try to reach this level before turning down, but I'll be watching to see if we now make a move to try to fill that gap or move closer towards it, and maybe towards gap support or beyond gap support if we don't reach it. But I'll be watching to see, do we try to get a higher low here, or do we just plow on through this area right here? If we try to rally with Taiwan Semiconductor earnings, try to extend the rally, I'll be watching this trend line. You may recall it was the triangle here where we broke down with the Fed. And then again, we've been getting these divergences that have been taking us back up that have formed this trend line. So I'll be watching the trend line closely, but you do have a negative divergence here. So again, we'll be watching to see if we get a pullback to try to fill the gap. You don't have to fill the gap. We might do it at a later date, but I'll be watching to see, do we go higher and get some kind of pullback, or do we try to get a pullback immediately? We'll be watching. The VIX is predicting that in the next 2 days, we will have a down day on the S&P 500. These divergences I talked to you about Monday, on the 60-minute charts that I talked to you about over the weekend, length and detail, again, they're playing out now. I told you over the weekend, and we talked about this last week, that divergences were setting up. And again, we got one in the more recent price action here with that low from Monday. And again, we already had them in place here, multiple point divergences going back. I think this is setting up for a big rally, bigger than what we already got. I think it's setting up for a major reversal here to give us our final 5th wave higher. Now, again, we gapped higher. We'll be watching to see what happens. You still have the 50 down here, the 200's up here. Again, if we go a little bit higher to our trend line, again, we tried to overthrow it just slightly there. Our 200 period is right there. If we include this peak right here, then again, you're right there at that 200 period moving average. So I'll be watching. Do we make it up to that high? Or again, we have a negative divergence on the 15-minute chart. Do we start pulling back? We'll be watching the gap fill here, rounding up to 58.43. Came back and we filled our gap. This sell-off took us back to fill the gap from the presidential election rally at 57.83. I talked about this gap getting filled. Talked about that possibility of filling that gap and forming a multiple point divergence. That's exactly what ended up happening here on the 60-minute chart. I didn't think we were going to go and take out the July peak there at 56.70. I thought that we'd fill this gap and then try to bottom out. Just looking for a bottom this week, and that, I believe, has now happened on Monday. But if we got a rally with the CPI data and bank earnings, PPI data, if we got a rally with the inflation data, we may try to bottom with that this week as we move now into earnings season. Again, we got that sell-off ahead of Inauguration Day. I talked about Inauguration Day being a possible sell-the news event. Had we gotten a rally ahead of it, we didn't. We got a sell-off. So it's probably going to be a continuation of the presidential election rally here, and then the pullback, and then continuing on to that December high. You'll probably see something similar where we go make new all-time highs. So beautiful divergence is playing out, just absolutely just nailing this turn. Now we got the MACD going into positive territory, but a beautiful divergence is playing out here on the 60-minute chart. And again, I keep telling you, we have this head and shoulders pattern, but I told you I think it's a fake out pattern. I don't think it's going to play out. And again, it measures down to the 200 period moving average. And then again, I think that we're going to end up back and filling these gaps up here above 6,000 and moving above this high over here to new all-time highs. We were just under 6,100 at 6,099. I think we'll exceed that and go to 63 or 6,400 or so into the weekly trend lines of resistance. Here on the daily chart, I told you again, I didn't think we were going to go below the July peak over here. And again, that's at 56.70, and I thought we'd get a higher low, but fill the gap. I talked about going lower and getting an ABC move because, again, I told you I thought that this was a C move down to complete wave 4. I don't share Elliott wave counts with you, but I'm doing that at this time because I think we're in this final minor wave higher that's going to complete a cycle top and really fits in nicely with my trend lines. And that's why I'm taking the time to share it with you. Do not trade Elliott wave, and Elliott wave can be invalidated. I do have alternative counts. This is what I think is happening. That's why I'm taking the time to share that with you and putting it on some of my charts to show you what I think is happening. I thought we'd fill this gap here and have a bottom. I think that's what's happening. I drew these channel lines. Now, again, we may not, and yesterday I showed you if we go up all the way up to that channel line, I am becoming more and more convinced we're forming a massive rising wedge. We had this rising wedge right here, and we broke down and we back tested it and we came down. I think we've possibly expanded into a channel, but possibly expanded into a much larger rising wedge pattern. And I've talked about that yesterday, and the upper boundary is here at this this July peak right here, this upper boundary, and I think that's pointing to the next highs in all likelihood. It may be that we go beyond that and have a channel if this low can hold. I think I'm becoming more and more convinced it's going to be this red trend line from the July peak that we're going to gravitate to, moving just above the 6,100 area. And again, maybe we overthrow it a little bit, but I'm going to keep both trend lines on there. Should this low hold, you've got a channel and you've got a large rising wedge pattern. I think we're starting this final minor wave, this fifth minor wave, and I think we're now done with minor wave 4 here. After we completed intermediate wave 4 over here, I think we have these 5 waves higher, and I think that we're in the 5th wave. We're starting the 5th wave now from Monday's low. So that's what I think. And if we pull back, we can get a wave 2. We go a little bit higher and then pull back. Maybe we break that trend line and go higher. But again, I'll be watching today's gap. Is it a gap and go? Is it a gap and fill? Or is it a gap and trap? Do we have more work to be done and we come back and we test this level and then we go on our way and get a higher low and validate that? Or do we just have a gap and go? And again, you see continued strength, and the pullback is more mild. We'll be watching to see how it unfolds. But this is what I told you I think is going on here in the daily time frame. We have these positive divergences that are forming on many indicators like the histogram here, but the MACD is yet to turn up here. We'll be watching. Do we just start, getting a powerful move and have it get a bullish cross and firm up there? Or again, do we get a pullback and then see it turn up after a pullback or surrounding a pullback? We'll be watching to see how it unfolds here with the S&P daily chart. And the RSI is coming up to the 50 level. Does it pull back? We have this little divergence on the RSI, a little hard to see with my trend line there, but we have that little bullish divergence there with this low over here and these lows over here, again, forming a multiple point bullish divergence. Not quite reaching extremes, just above extremes there on the RSI. In order for the advance to resume, got to get above the 50 level, which we're trying to do right now, and stay above it. We'll be watching for that. But again, I think you have a bottom, the head and shoulders. And again, remember back at the December top, I told you about the divergence here and on those 60-minute charts. Ended up going sideways on the S&P, and we got a triangle. I told you the triangle could break up or down, and if we broke up, we can continue the rally. Or if we broke down, we're going to continue the sell-off. Broke down, and that was with the Fed day. But remember, back at the December top, we're going to get some kind of corrective move. All those bearish divergences on the Dow and the Russell, nobody believed we were going to get a sell-off. Finally, we started, the herd start to get bearish. Oh, we got a head and shoulders. We're all going to die. Because we're now seeing the herd turn bearish, and maybe we go down a little bit more to get a higher low, and turning bearish again. We're turning bearish as we were getting the sell-off last week, and then on Monday's low, again, we bottomed out, and I pointed that out with the Sheer Greed Index last week and this week. Indicators that, again, why I thought we were bottoming out, and I believe we're going to get this rally back up. I still remain bullish in the weekly time frame that we're going to see this final fifth wave. I'm telling you, listen to me carefully. The herd, we're going if we go to new all-time highs, like I think, up to one of these trend lines, probably this red one, and that's where it intersects with the weekly chart, the herd is going to get extremely bullish, tell us there's no way we're going to get a bear market, and we're going to get the biggest rug pull. We're going to see a drop of 20% very quickly. Then the Fed will panic, likely do an emergency cut, and usher in the bear market. Here it is up close, and again, this is the 5 minor waves off of that intermediate wave 4 that I've been talking about. And again, if we come up here, it finishes a bunch of counts for my Elliott wave counts. We're going to get a continuation. Look at this. We had the presidential election gap rally right here, and social media, they're calling it the Trump pump. And again, we came back and we filled that gap right there. I think we're going to resume that now, and again, go to higher levels and up into this 63 or 6400 area on the S&P 500. The multiple point bullish divergences on the RSI, and here on the stochastic and our histogram there. Now here's a bigger picture on the weekly chart. And again, what you just saw on the daily chart is right here. This is the minor wave 5, this 5-leg push higher. This is the off of the intermediate wave 4, and I think you have these larger counts in play, the intermediate wave 1, 2, 3, 4, and 5, and then I think you have the whole thing off of the 2022 low being our primary wave 5 here, primary wave 3, primary wave 4, primary wave 5, and I think that will complete the cycle top. But I'm becoming more and more convinced that we have this rising wedge, and the rising wedge, the upper boundary, it intersects with this upper boundary of the channel in this area. And again, in the next few weeks, I think we could reach this level. Again, because we've sold off back to this trend line, which I warned you about last week. I said, hey, we're at the 20-week moving average. We can try to hit this trend line, and we move just beyond it, and we try to bounce. But we can get a bottom there and go up and get another reference point of a divergence and reach this level for the final climax rally, the final phase of the blow-off top. This blow-off top, I think, could conclude at these trend lines, and I think that we're going to get this wave count going higher. Multiple point divergences usually produce a reversal rather than a correction.